Hey, Joe Mastriano, CPA, and today I want to warn you about getting bad audit proofing advice. Since the IRS said that they're looking to hire 87,000 people and they're going to go after us and audit us, a lot of tax preparers are putting out advice on how not to be audited. And I've been watching some of those videos, and I have to tell you, these inexperienced people who might be tax preparers for many, many years, they don't have experience representing people in audits. You have to be a CPA, an attorney, or an enrolled agent to do that. And it's very easy to get misled by their advice. For example, um, I'm listening to this one guy, and he seems to be pretty angry. He says the word freaking a lot during his video, but he says, keep office and home deductions down. He knew someone that had like 80% of his um, house expenses deductible, and sure, that's pretty high. And then they won the audit to like 35% or something, which he thought was high too. I agree with him. It did seem high, but really, what you have to do to defend your um, deduction, let's say the audit office and home deduction, is that you have to prove the business purpose. There are purposes. For example, if you have a place to meet your customers, like I do, this office right here, I can't take an office and home because even if I chose to meet some of my clients at home, it's not my main place where I meet customers. And so once you meet those criteria and you have the receipts and you have the uh, invoices and you follow the law, then whatever the percentage is, you get to deduct. I'm reminded of the Clydesdales from Budweiser beer. They got to deduct the cost of their home because they had to stay on the property to take care of the horses. So your situation can run the gamut of simple to more complex, but as long as you follow the rules, you should not be afraid of the IRS. Another one is entertainment deductions. Now, he's saying, oh, keep it down to about 10% of your gross income. Nonsense. If I have to pay somebody to get clients, and they want me to take them out to eat and um, do other things, other venues with them, I'll probably give them a 1099. But whatever that amount is that I can justify the percentage, let's say it's 35% of my gross, fine, that's what it is. Because as long as you follow the rules, some accountant or tax preparer's interpretation of what the tax law is, which has their own fears involved in it, should not intimidate you. And then they're saying, oh, here's 10 things not to get audited. And what they're doing is they're rehashing stuff from many years ago. I've been doing tax returns since 1975 when I was 19. These are things that Intuit and the news media might tell you, and those two groups probably have much closer relationships with the IRS than they do with their customers, and you know who they're putting first. My audit proofing techniques work because they involve matching the documents the IRS has on you and explaining what you're doing and filing a paper return so you can have really good documents and explanations with the return, not e-filing and trying tricks such as don't estimate because The IRS knows you're not going to have exactly 2,000 miles. Well, and what was his alternative? To make up a number? Well, then that's lying. That's not what your mileage is. What are you going to do? Tell the auditor you made up a number because somebody told you not to estimate? We estimate when necessary and we put on the return. Taxpayer did not keep a mileage log. He's will make one up if audited from his appointment book and invoices. In the meantime, we estimate, between 1,900 and 2,100 miles. So we're putting down 2,000. Be honest. Don't play games and tricks. And another thing they're telling people, which really gets me, is they read in a tax book that something's deductible. And they go, oh, look, it's deductible. It says it right here. Well, without understanding what the IRS requires for evidence, and a lot of it has to do with the nature of the transaction, not if they just found it in the book. And there's also by now it's 2022, there's a lot of case law and precedent on various deductions. And why put something down to save a few $100? If it's going to be challenged, then you might have to have $20,000 in attorney's fees going to tax court to protect the deductions. Why not just be honest, understand the rules, follow the rules, follow my 4 parts in another video on YouTube. You can look it up in more detail and just not be audited in the first place. So, in conclusion, do not take audit proof and advice from somebody who has not represented many, many taxpayers in an audit. It's common sense to me. As always, subscribe to my videos, click the bell for notifications if you want to be notified every time I post. That's it. Thank you.